you get recessions. You have stock market declines. If you don't understand that's going to happen, then you're not ready. You won't do well in the markets. Legendary investor Peter Lynch gave us that nugget of wisdom. And guess what we do here every day? We prepare for all the things that are going to be happening in the future. And there is a stock market crash coming. And we will be ready for it. That is game day for us. We study the stock charts. We don't pay attention to what the gadflies tell us in the news. Remember, they are selling commercials. We are paying attention to what's actually going on. What is actually going on, you see in the price movements in the charts that we track every single day. You are in the right place if you are interested in understanding the markets, building a nest egg, retiring early, doing any number of things and having all the wealth that you can imagine. Just imagine being able to have a skill set where you can look at stock charts, read them, and figure out what the markets are doing. And we keep it as simple as possible. I had a great long conversation with the Patreon supporters yesterday, all our folks. And we talked about a number of things, but the big thing that they're excited about, that I'm excited about, is continuing to chart these markets, see what's going on, make the proper decisions, and again, get ready for what's going to happen in the future. And in the meantime, we have great opportunities for doing lots of great trades. You think about the Qs trade we had recently that was super successful, the shorting of gold that we had that was great. And now what's happening? What's setting up? Well, could we be setting up for the summer low coming in the markets? We'll see. And again, great to have you with us. Also been selling the hell out of books. We have almost depleted our supply of our latest printing of the book, and we've told the printers to send us over another load. If you don't have the book Charting Your Way to Wealth, you need it. You can find the link in the show notes. Go ahead and buy it. If you live overseas, just email us. We'll talk a little more about that at the end of the show, cw@chartingwealth.com. Let's jump into these charts. 10 to 15 minutes a day is all we ask for greatness. And again, we're not a stock calling service. We're an education firm. We're not giving you market advice. I want you to practice trade with us till you get good at it. Then you can do whatever you want with your own money. Let's jump in. Price percent oscillator for the first time in months is actually crooking over, going down on the weekly chart. That is significant price movement. Pushing through the red signal, the weekly trend line. We see those alarm bells going off, and we also see the price percent oscillator, I said going down, derivative oscillator, also losing energy for the first time in many weeks. So we have this red spinning top. It again has a little bit of a wick on top, more of a wick on the bottom, means indecision, tending down. Again, it's not a solid red candle like we saw back at the end of the year, but this is the first real red candle that we have seen since 2018. So significant after all this run-up. Does the market blow off steam? Does this mean everything's crashing? No. It can simply mean that after a lot of running up, it's taking a bit of a rest. We'll watch and see. We don't have a weekly vertical crossover going down yet. We're not really even close to that, unless there was a huge systemic crash that started on Friday, and doubt that's going to happen. But we are paying close attention. We go to the 2-day chart. What do we see there? Well, we see that the Monday, Tuesday was a down candle on the 2-day chart. And of course, this latest candle has completed for Wednesday, Thursday, and price percent oscillator heading down strongly. Derivative oscillators really dropped down. We have no wick on top. We had a little bit of one there back on the Monday, Tuesday 2-day candle, but this latest one is just a down candle, down 0.30% for the day. Again, strong down movement underway. Go to the 4-hour chart. What do we see there? We sort of saw things bottoming before back on the afternoon on Tuesday and then the morning on Wednesday. Well, that would have been the morning on Wednesday and the afternoon on Wednesday where we had things bottom. on Tuesday afternoon and sort of stay there on Wednesday as far as average pace goes. And then, of course, dropped off the deep end there on Thursday. It's been a long week already. Thursday morning, and popped up a little bit Thursday afternoon. So that's where we see the price percent oscillator sort of pull away from its deep dive. Derivative oscillators also lost a little bit of energy, and we'll just continue to watch and see what we see. Again, this is our smallest chart, but of course it always leads everything, and with that 2-day chart confirmed rolling over, of course, those down moves are significant. We'll just see how long they go. Again, we don't call a trend until the weekly and the 2-day are moving in the same direction. Even those are pullback on the weekly. It's not a weekly vertical crossover. The magic of those weekly vertical crossovers is seen in the past and how significant they are to changes in trends, which makes it pretty darn easy, a heck of a lot easier to track, doesn't it? When you have charts that actually work, that you can actually read them, super simple, and things you can look at and say, gosh, it crossed over going down back there on the week ending the 12th of October 2018. Is it going to go down for a while? Yeah, it is. So why in the world would you lose all that money if you were sitting there in the S&P 500? Why wouldn't you at least pull your money out, wait for it to bottom out, and then once it rotates back over going up, everything's safe, you jump back in, back on I guess that would have been the week ending the 1st of February of this year, and ride it up for a while. Makes a lot more sense, doesn't it, folks? That's what's so valuable about reading a chart. People ask me about being a value investor. Well, I'm all for value investing, but I'm also about buying at the right price. The hell would you buy when the market's rolling over, crashing? Why wouldn't you wait for it to bottom out and buy it cheap? That's what we talk about all the time. That, my friends, is the real value of spending 10 to 15 minutes a day with us. Think about that. When you start looking at 10 to 15 minutes a day for being able to develop the kind of skill set that we teach here every single day, what can that reap for you in benefits? Just your per hour wage. If you make for yourself or save for yourself hundreds of thousands of dollars over the course of your lifetime, over the course of your investing life. Or when the next market crash comes, you're not one of those suckers there wondering what's going on, not being able to figure out what's happening as you lose everything. We're going to keep that from happening. You're not going to be one of those people. We are here for you. You're going to be with us 10 to 15 minutes every day. Read the book. Take the trainings for free at the website. And we've also, I'll mention this a little more as we get further down the road, but we're going to have a several month training that we're going to be offering here. Never done this before. I've finally been convinced to put in the time and energy in addition to everything else we do and do this training. So I'll let you guys know about it as it gets closer and as we start making it available. Now, let's jump on the Qs. Down the most for the day, 0.54%. Again, another red spinning top. Price percent oscillator. It's almost a ditto of what we see going on with the S&P 500. Price percent oscillator going over. Derivative oscillator losing energy. Go to the 2-day chart. What do we see there? Crossover heading down. Again, another strong, solid red down candle with a wick on the bottom. Derivative oscillator dropping. Price percent oscillator dropping. 4-hour chart. Same kind of pattern. Sideways slide there. That started on Tuesday afternoon. Saw it throughout the course of the day on Wednesday. Then a big drop on Thursday. A little bit of a recovery. Same thing. We're just continuing to see how this is going to settle out. Of course, we don't have a trade in the Qs or the S&P right now. The Qs, of course, NASDAQ 100 tech stocks. Continue to see how things work. Now, if the market's working correctly and stocks are going down, what should bonds be doing? Going up. That's what we see happening, up for the day, 0.41%. You might say, why? Because money tends to go, when stocks aren't doing well, into bonds. A safer haven, supposed to be. Has been in the past, but everything's subject to change, isn't it? So what do we see going on this week? Green up candle so far. Derivative oscillators still negative. Price percent oscillators pulling away from the red signal line. Still in a confirmed move. We thought for weeks, like the last 3 weeks, even this week thought we would have a crossover until things changed. And now we see it pulling away from the red signal line, as that is the price percent oscillator. Derivative oscillator, maybe it'll go green before the end of the week. We go from the weekly to the 2-day. Of course, that 2-day crossed over at the end of the day, at the end of the 2-day candle on Tuesday. And of course, green up candle, rather strong price movements above the 2-day and the weekly trend lines. We go to that 4-hour chart. What do we see? Well, bumped up, and it's really slid sideways the last 2 days as far as our average pace goes in our Heikin-Ashi candlesticks. Derivative oscillator still heading up. To jump in, we got to wait for a pullback on this 4-hour chart. We're not just going to jump in because we see some up movement and have it turn over on us. We want to wait for a pullback, which will be a crossover in the opposite direction. Then when it moves back to going up again in the same direction as the 2-day and the weekly, that's when we'll jump in. You might say, what if that never happens, Tom? Then that never happens. Then we don't get into the trade. But I really want to get into that trade. I really think it's going to keep going up. That's not the rules. And we follow the rules because in the long term, the rules work time and time and time again. Sometimes they don't pan out, but most of the time they do. That's why they're the rules. Okay, let's keep moving through the charts. And you want to know more about those rules? The book's available. Check out the show notes. We'll sell you a book. We appreciate people buying those because that's a way that we're able to support all the work that's done at the channel. Now, let's keep moving. We see gold up for the day, 0.24%. Gold still in a confirmed move down as it has been since it crossed over going down back on the week ending the 29th of March. And we see gold for the week. We've got a green spinning top. Price percent oscillator still going down. Derivative oscillators losing some downward momentum, but prices pushed through. The red the red candles have ended. Prices pushed through the weekly trend line and, of course, the 2-day trend line also. That's significant and important. The more of the indicators we have that are violated, the more important the changes are. And what do we see going on at the end of the day on Thursday when this latest candle ended? We have a 2-day crossover on gold going up. The first one in quite a while. We will now make that official by moving the vertical crossover line, the blue one. We're going to move that on to the perfect spot, the correct spot, and we're also going to take our arrow and we're going to rotate that over to demonstrate that indeed we have a crossover going up on gold now. That is also significant, my friends. So we see a second 2-day green up candle. We go to the 4-hour chart. What do we see there? Gold was down in the morning on Wednesday and down particularly in the afternoon on Wednesday. Popped back up, but again, a sideways slide. Not a whole lot of strength there, but we'll continue to watch and chart things. We're going to take out our blue line for now until we really have some more movement and can establish an uptrend with that 2-day chart. But we are just waiting to see how gold shakes out and if and when we have our weekly vertical crossover occur. May or may not happen. Gold may just rotate back over. Again, just keep our eye on things. It is important. If you were in a down trade, of course, these crossovers, the penetration of various trend lines, those things are extremely important, taking that opportunity away from you. Folks, that's where we are as we end the day on Thursday. We so appreciate you being with us, appreciated all of our Patreon members that were with us yesterday on that great call-in. If you'd like to be a Patreon member, want to really support the work at the channel, we got lots of great things for you. Not only do you get a do you get a call-in, a question and answer call-in that we do with our Patreon members every month. You get that at any of the Patreon levels of support. You also get all sorts of other things. We do a chart review on the charts you're interested in. If you're interested in certain stocks, commodities, ETFs, whatever they might be, we review those charts once a month. And we, depending on your level of support, you can get a free book, you can get a free 15-minute personal phone call once a month. And in addition to all those good things, everybody receives our short chart training, our Bitcoin chart training with a special chart that we have for that. And in addition to all that, we also have our quarterly chart training and the quarterly chart reviews that we produce for our Patreon members. All sorts of good stuff. Folks, we so appreciate you being with us. You're the entire reason I go to this trouble every day to present this information to you. I love getting your emails. I love hearing that folks, and I get them all the time, for the first time. I've tried being in the stock market for years, and for the first time, I actually understand what's going on. I can't tell you how much that warms my heart. That is the reason I do this, is to all of a sudden have the light bulb go off and people say, wow, you've taken all the confusion out of this. And I say, hey, the confusion's on purpose. You know, they want to convince you that you can't do this. You can't possibly understand this. The machines are in charge. There's no way to make money in the market. Or just turn your money over to people who will all know much better what to do with your money than you know how to do with it. Now, come on. We know that you are the one who cares the most about your stuff. And we want you to have that knowledge so you can use it for the benefit of yourself, your family, your friends, the charities you care about. That's what we're here for. My friends, thanks again. Love to hear from you. cw@chartingwealth.com. All of our friends overseas, you want to buy the book, just write me at cw@chartingwealth.com, and we will be more than happy to send you a PayPal invoice, and we'll send your book wherever you live in the world. God bless. From the whole team here at Charting Wealth World Headquarters.